Now, you guys have seen how to trade the opening range breakout, which is one of the easiest and the most simplest strategy out there. There's a ton of videos out there. I've made one as well. But one question I got from a lot of you guys was, how do you find the perfect opening range setup? Like, what is the process? How do you filter down from looking at from pre-market or the weekend to coming down to, all right, this is the stock that I'm actually going to trade for the opening range setup. So in today's video, we're going to filter down looking at a chart and set a criteria as to what you need to see on a chart in order to determine if it is a good opening range break setup or not. Now, the opening range break is usually set by the time frame that you guys are setting on. So let's say if you're trading the 5-minute opening range, then you have to wait for the 5-minute candle to close. If you're waiting for the 15-minute or the 30-minute. So there's different variations of the opening range break depending on the trader. Some traders use the 5-minute, 15-minute, or the 30-minute time. Now, I typically go for the 15-minute and sometimes 30-minute depending on the market. Now, the 15-minute time frame is essentially going to be the best time frame for you guys to use the opening range break. Now, that doesn't technically mean that you have to trade on the 15-minute time frame. It just means you have to wait for the 15 minutes to kind of pass by in order to take the trade. Now, before we break down a chart and go over how to properly look for the perfect opening range breakout and how to filter through a few of your stocks in your watch list, you have to understand that opening range breakouts need to have certain confirmations, right? You can't just blindly go after these setups. For example, if the stock is in range, or if we don't have any catalyst, if the market is moving in divergence, then the direction that you're looking for the opening range shouldn't be focused on. Now, the reason why I really like the opening range break, and I'm pretty sure there's a lot of traders out there that love this trading strategy, because you have to wait for that time frame, 5, 15, 30 minutes, depending on whichever time frame you're trading the opening range break on. You have to wait for the confirmations for that time frame, right? So if you're somebody who's not that patient and you need to wait to take trades, then 15 to 30 minute time frame is going to be the best opening range setup for you. If you're great at trading opening ranges right at open or opening drives, then the 5-minute is going to be the best. So ultimately, it kind of boils down to what type of a trader you are. Now, in my opinion, in the current market, I think the 5-minute opening range break isn't working out that well. If I'm going to take the 5-minute opening range break, I might as well go after an opening drive. All right, let's go over a chart, and I'm going to show you guys what the chart needs to have in order for you to go after an opening range break. So here we have NVIDIA. The first thing you guys want to see when you open up any chart is what the direction is on a longer time frame, right? We're not really looking for a long-term trend. Like right here, we don't really have a major trend change happening yet. Right? This could be a very slight pullback. So you have to identify what the overall trend is on the chart and then go from there. So in this case, we had an upside trend. We started to consolidate and now we are starting to pull back. Now, first thing before you jump into considering taking the trade is going to be key levels. So the first major level we have is going to be around this 170 level, right? Now, when stocks are making new highs, right, there's something called price discovery. This is a term that traders use when price is testing a new level, and during that price discovery, we have to find new support and resistance levels or new supply and demand levels. So usually these levels change as stock tests those levels multiple times, right? So for now, we're going to use the 170, right? And then we have a tiny gap here from couple of weeks ago all the way down to 165. It did get filled, some of it, but we have to look into the fact where the wick is and where the body is. So we still have a few points that need to be filled. Overall, this is where price held, roughly around 165, right? So the other levels, I'm not really gonna go sit here and try to point them out. What we'll do is now we'll go into the shorter time frame, right? Looking at the hourly. Considering that this is the hourly time frame and we are currently paused on the on demand for the pre-market price action. Now you guys can see here, and this is something you don't have to look for perfection. If you can find a level very easily, that would showcase that, all right, there's a level there. But if you're trying to pinpoint a perfection in terms of support and resistance levels, you're gonna end up wasting way too much time. If you can eyeball it within the first 5 to 10 seconds, that is a very good level. Now, to confirm if it's a good level, all you gotta do is kind of zoom in and it'll tell you, all right, do you need to make a little bit of adjustments? Does it look good? Or, taking it from there, we can then go into a shorter time frame to get our confirmation to see, all right, are there any levels that we are missing? So going from 1 hour chart into the 15-minute time frame, right now, this is pre-market. Right. The reason why we're going over NVIDIA, just to give you guys a reference, is we have a pullback down to 170, right? So now, if today was the night before going into the following day, what I would look for is, all right, if this gets back under 170, this is going to be a very nice trade for me going down to the next level, which I have roughly around 165 and change. If it gives up that level, the next level I have is roughly around 162, right? So now we're making these hypotheses based on the chart that we're looking at, right? So now when you switch over to the pre-market for the following day, right, the first thing we see is the stock is now below the 170 level. Right? Again, you can also look at opening drives very similar way like this, but in this case, we're looking at the opening range. So we're going to focus more on that, and we're going to focus more on the 15-minute range break. So now we have that confirmation, right? Second thing we want to pay attention to is then we want to switch over to the 5-minute time frame, and we want to see, all right, where were majority of the holds around pre-market price action, right? And you want to zoom out to make sure you're not missing any levels. So usually on the 15 or any longer time frame, when you zoom out, you will get a better picture. So we had a few days ago where 168 was the level that we had a slight hold on, right? So right around here, 168 and change, I would say, where we had very close to pre-market. Then right here, we broke out, retested and broke out. And then also today pre-market, right, we held that 168 and change, held again, right? So now this is our another level that we want to keep in mind. Right, so typically going into the open, what I want to see is a slight pullback and a rejection of a previous level. So here the rejection is going to be that 170 level. All right, so now let's fast forward into the first 15 minutes, almost the 15 minutes setting up. All right, so this is the first 15 minutes. So you guys can see that we rejected the 170 pre-market, and now going into the open, we try to pull back and we could not actually break out, right? So now we are getting this range on the first 15 minutes time frame. Now you don't really need to be looking at the 15-minute. Again, that's just a reference point. So we'll switch over to the 5-minute. This is the time frame that I typically look at to take the trade, right? Now, once that first 15 minutes are over, right, the red lines are going to be our levels. Now we're going to use the high. This is the 15-minute range, right? We're going to give this, give it a yellow, just so we know exactly what these levels are. And then this is yellow as well. So the yellow is going to represent our 15-minute range, okay? Now, once you have determined the 15-minute range, now we know that, all right, 170 is a level that was a key level. We're well below this. So going back onto the daily chart, you guys can see that that is exactly where the price is right now, right? Remember, this 170 was a key level. We gapped down on this. So now we want to make sure that we reject and continue on the downside, which it did during the pre-market price action right here. We had that test from that previous day. We had a break, and then we had a retest. Now this is showing us that the stock is showing weakness and we are pushing down, right? So we close under that 168 level. The opening range for the day for us is going to be 169 and change down to 166.45, right? Now within these opening ranges, obviously you can take a lot of early entries. I'm not going to jump into those early entries in this particular video, but we're going to fast forward to when we get that confirmation to take the trade. As long as it's staying within that 15-minute range, we're not taking any trades. For the calls, we're going to be going long above 169. For short, we're going to be anywhere closer to under 167 for the short position. So as of right now, we do not see any breaks happening, right? So that means we are staying cash and simply watching the price action, right? So going into now, this is turning into a 30-minute range. Now, what a 30-minute range means, it's been 30 minutes and the high and low off that 30-minute time frame are already set, which were set within the first 15 minutes. So fast forwarding, right, at this point, we have no trade, no confirmation yet until 10:03, right? Now, I'm gonna just pause it right here just so everything can kind of catch up, right? We'll open up time and sales and level 2 as well, just to kind of show you guys. This does take a little bit of time when you're watching the tape on demand, but now I'm gonna pause it right here, okay? Now, when you guys are looking also on demand, it is going to do a little bit of flickering. But anyways, now what is one thing that you notice when you're looking at this chart, right? we had an earlier test. Now, obviously the first opening candle's 5-minute volume is always going to be at the highest because there's so much activity happening. As we draw down into further into the day, you guys will see we come back, retest higher of the day, right? Volume is very consistent with this candle here. Now we had pretty much drop of volume around these 3 candles here, which shows that interest had been dropped considering the previous 3 candles, right? Now we are breaking towards the range, right? We are going into towards the low of the day, which was set pretty much at the open or within the first 15 minutes, right? Now the volume has spiked. Now what this is telling us is that there is more interest in people jumping into this particular price point on this stock. And because there's high volume, there is high interest. So I'm gonna fast forward a little bit more. There are a lot of early entries in these types of trades, but again, I don't want to jump into that yet. Our entry is going to be once we break outside of this 15-minute range here, right? And obviously you want to make sure there's volume there, there's confirmation, right, coming in from price and volume. So let me just fast forward this into 10:09. All right, so now you guys can see we are closing outside of this range. All right, we are well outside of that 166.50 range, right? And which is the 15-minute range. Now, once this candle closes, that is going to be our entry point. You can use the previous range as your stop. I usually like to give my trade a little bit of more room because if I'm jumping in right here, I want to be able to give it a little bit of room. So I'm going to use the previous level, which is going to be the 167, which is also very close to where the first 2 5-minute candles kind of held. So this is where I'm going to initially set my stop once this candle is closed, right? So now this is your entry into the opening range while you're setting your stop right below where the previous held was. Now, usually if this pushes away from that range, I use that range as my stop loss, but because we're still very, very close to this, an ideal stop is gonna be where previously we had that bounce. So this is your entry, right? Let's fast forward a little bit. As we fast forward, you guys can see we retested that range and we are continuing now in that direction, right? Now, going back to that daily chart, to what I showed you guys can see here where the price actually gapped down, right? Then we kind of stayed in this range for 2-3 days, and when it finally got below our 170 key level, that's when we're starting to look at it on our pre-market price action. And during that pre-market price action, what did we see? We tested 170 once, twice, we broke out, retested, and then we continued on the downside. We set our 15-minute opening range. Once that first 15-minute was done, we had our initial close roughly right after 10 o'clock, a little bit after 10 o'clock, right? And now we take our stop loss, which was roughly around 167, and we bring it down to 166.30, which is our range. And as the stock moves in your favor, you can obviously scale out of your trades as the stock is moving in your favor. And secondly, what you can do is start increasing your stop in your favor. Now, if it's especially in this particular day, if it's a 0DT trade, then you want to be more aggressive with your stops because it pays very well, but also on the pullbacks, the premiums are going to lose value just as aggressive, right? So you guys can see this level that we set a little bit above 165 is starting to show a little bit of a hold, right? So your levels are going to be very, very critical when you're coming up with these opening range breakouts or any strategy for that matter. If your levels are not on point, you're not going to know where there might be a little slowdown or a pullback when price is pushing in that direction. So just to fast forward, we see that we had that retest and now we got below that level. Now in this case, right, taking our stop loss from 167 and change down to the range level, we're going to increase our stop now to the new level that was tested, which was 165.40, right, where we have that initial test, we had a retest, then a break, and then a retest of that level, right? So when our levels are getting retested multiple times, that shows how significant that particular level is. So this is how you guys will find high probability opening range breakouts. Opening range breakouts are not just about the 15-minute or 30-minute ranges that you see set on that particular day. They're more about what's happening on a larger picture, which is the daily chart and the hourly chart, and then from there we set levels and we determine our trades based on those levels. You can't simply just jump in by looking at the first 5-10 minutes and say, all right, this is gonna go that way. It might work out and it might not work out. It's gonna be a 50-50 chance in that case. So I want to know how you guys trade the opening range? What is your criteria? If you guys comment below how you guys trade your opening range breakouts, I'll give you a feedback as to what I think you might be doing wrong, so it can help you guys get better. But opening range breakouts are very, very simple, but most people end up making them very, very complicated because they think that you just have to look at the first 5-10 minutes and that's it. If you're not looking at the bigger picture, if you're not looking at the overall trend, you can easily get trapped in fake outs. Like, let's say in this example, if we had a very strong key level, let's say at 165, and we were not aware of that, we would have gotten faked out if it had just pulled back from here very, very aggressively, right? So your levels, your overall trend, your multi-time frame analysis is all going to play a very vital key in which setups are going to be more important. Before I let you guys go, I'm going to mention one thing about what you want to avoid when you are taking these opening drives. So let's say you have this downside trend on NVIDIA and NVIDIA pre-market just goes right back above 170, right? Just as a scenario, how it breaks down and then before it even opens, it's above 170. Now you don't have key levels to take the opening drives. Right now, your opening range levels are going to be too far apart in terms of the overall trend for us to go after that, right? In this case, it just played out very perfectly because the overall, we gapped down, we consolidated, and then it broke below that 170 level, which was a strong key level. And we retested that and couldn't break out of that pre-market. And then going into the first 15 minutes, we had that range, which is also pre-market level as well. And then it continued to drop on the downside. These are some of the criterias that are going to help you find the best opening range breakouts. And this is how you should be trading the opening range breakouts. I hope this video is helpful, guys. Comment below what other things you guys are struggling with. This video idea I pretty much got from your comments. So the more you guys comment, the more I'll be able to know what type of content to make for you guys.